Hey guys, it's me again. It's your resident online mortgage lender, Robert Lewis, NMLS license number 180100. Back at you again with another video. And the reason I wanted to make this video today, my why for this video is as follows. I had a question from one of my subscribers, right? And TZ Via. I believe that's the proper pronunciation. If not, charge it to my heart, my head, pardon me, not my heart. I didn't mean it purposefully. But TZ asked, or he commented, he said, great info in reference to one of the Texas State Affordable Housing Corporation down payment assistance videos that we put up recently. But his question is, do 1099 or business owners qualify for TSAHC? And that is the reason for the video. And my answer, TZ, is yes. It's a resounding yes. And with that, I guess I could end the video, but uh, I want to go a little further for you all as business owners, because there's a lot of trepidation for you guys as business owners. And it's understandable because there's a lot of misinformation out. So with the answer of yes, I want to give you all as business owners a little more insight so that you could be empowered to move forward. Because the first step is most likely or usually the hardest step to take. Okay. And so we want you to make that first step. And so again, not only can you do or use the Texas State Affordable Down Payment Assistance Program if you're self-employed or a business owner, I'm going to go into some information to show you how. Okay. So before we do that, let's get some understanding on a couple of things. Um, Anytime we're doing any of the down payment assistance programs or the traditional type loans, we have to, I want to give you guys a understanding of what type of loan that is from a lending standpoint. So that's what we would call, or this is what we would call a qualified mortgage. And by definition, as you can see on the screen, a qualified mortgage is a category of loans, right, that are less risky feature wise and that help make it easier for us as lenders to be able to better able qualify you to make sure you have the ability to repay, ATR, ability to repay, that you can afford the loan. So this is that type of loan. The reason I want to make that designation, the difference, is because we have non-QM, non-qualified loans that have much more flexibility, I'll say it that way. And if you would like to see a video on non-QM loans for self-employed and things of that nature, you guys let me know in the comment section. I'm done with doing videos just to do it. I don't want to guess. I want to know what it is that you guys have questions about so that, we could get to it, because, I don't want to waste your time nor mine. So let me know in the comment section if you would like to know about non-qualified mortgages, okay, for self-employed borrowers or potential home buyers. But know this, as a non-qualified mortgage, you don't have access to the traditional types of products such as the Texas State Affordable Housing Down Payment Assistance type programs. Okay. So with that, we'll move on. So you might ask next, who can get these types of loans? And that is an excellent question. And I would say that in the state of Texas, again, Texas State Affordable Housing Credit, TSAHC, that down payment assistance program, it's the one that I talk about because it's the best statewide program that we have. But there's two categories of folks that can get that type of loan, right? And so the first category in the program, we call it Home Sweet Texas. So anybody that is not a hero, okay, qualifies under the Home Sweet Texas, as long as Texas is your primary residence. You're living in the state. Okay. That's the first test. So don't be dismayed. If you're not a hero, but you live in the state and you meet the other criteria, okay, you can use this program, the Texas State Affordable Housing Corporation. And there's several flavors of down payment assistance under that umbrella. Hopefully that makes sense. Now, if you want to know if you are a hero or not, then I would admonish you to watch this video. Go to the YouTube, subscribe, right? It's all about subscribing so you know about the information that we're putting out on a regular basis. We're stepping up our game over here. But again, we want to know and only put out information that you want to know about. But I digress. I don't want to diatribe too much, but are you a hero? Okay. And it's specifically in reference to the Texas State Affordable Housing Corporation down payment assistance. So, somewhere here above me, for sure in the description, we'll have a link to that video, and avail yourself to that and the other playlists that we have available to help you, educate you, and get you more comfortable as you move on that continuum to get to the point where you reach out, start that home consultation. Remember, the first step is the hardest so that we can get you in the game, because home ownership is very important and it's necessary, right? So with that said, um, let's go a little deeper. Let's go a little deeper. Now that we understand what a qualified mortgage is, okay, we understand who can utilize this program as far as the state of Texas is concerned. I think it's very important for us to talk about the different business structures, okay, entities as far as um, self-employment is concerned, or 1099, because there's a lot of nuance to this, and that's why there's a lot of trepidation, because it's just so much gray area, and a lot of lenders unfortunately don't know how to calculate properly the income that you can use, because a lot of you guys are using the tax laws, and you should, to lessen your taxable income. But it's important to partner, especially if you're looking to purchase a home, with the right lender, so that you can either plan, if it's something that has to be in the future, or we're right around tax time now, be a great time to consult and work with your lender to make sure that you don't sabotage yourself because you wrote off too much income. So, what types of self-employment business structures are there? So, the most common is what we would call the sole proprietorship, right? Then I would say we have partnerships in the form of limited partnerships or limited liability partnerships. And then last, and most definitely not least, corporations, S Corp, C Corps. Now, these entities, these structures are what I see most common when dealing with residential real estate, 1 to 4 units. Okay. Single family, duplex, triplex, fourplex. These are the business structures that I deal with. So, sole proprietor, partnership, either a limited partnership or a limited liability, and a S Corp, or a corporation under the S Corp umbrella or C Corp. And depending on what entity you are, that will determine what we as your lender will need for documentation to validate and calculate the income that we're going to be able to use, right? So those business tax returns or bank statements, all those things that we need to figure out what the income is, because that's what we would need all those things for, right? And to determine if you meet the test for how long you've been in business, depending on which direction we go in, right? So as far as what the lender will need, for the most part, it's like this. Conventional FHA loans have real good guidelines as to the amount of years and the type of documentation we would need, like personal and business tax returns and things of that nature, depending on the structure, the entity that you have. Now, VA technically doesn't have any guidance on this. Okay. VA is kind of the wild card. All you veterans out there are qualified military members. Don't let anybody talk you out of your benefit. Again, I got some good videos on the channel about that as well, but that's the best loan smoking. I digress. VA really doesn't have any guidance on the issue. And USDA is a little better than VA, but for the most part, And I'm speaking for myself and most investors that I deal with. If I have to broker out, right? We're also a bank, but I could broker as well, all 50 states. We're going to look at 2 years. Got to get the average, especially after the pandemic and the COVID-19 restrictions that were put in place that most have uh, removed at this point, but there's a couple of underwriting things that are going to stay. Okay, and I'll allude to it briefly just here in a minute. But for the most part, conventional, FHA, VA, USDA, those are the different loan types. Again, which one you go with is going to be specific to your personal situation with the documentation, right? The document leads. The documentation tells us the story and which direction that we need to go as far as a lender is concerned to make sure we're putting you in the best position. But 2 years, right? 2 years of the tax returns filed, signed. I'm going to get transcripts, right? Got to make that circle. So that's the first thing. And more than likely a P&L, profit and loss. If you're in business, you know what that is. And sometimes we need them audited, sometimes we don't. Again, your specific situation is going to dictate what we need. So again, I kind of alluded to it, but tax returns, personal business for the most part. Okay. And the reason I say personal and business, here's another little uh, digression point, but it's a jewel. If you're in business, you make things so simple for yourself. Have a business account and then have a personal account and let all the income and everything go into the business, right? And then from there, you take whatever monies you're going to take to live or whatever you're paying yourself and take that out and put it into your personal account. Don't commingle stuff. Business stuff, leave it business. Personal stuff, leave it personal. So in most cases, we have to get personal and business because the accounting is muddied. Okay, but personal tax returns sometimes could be both. Most of the times it's going to be personal and business. Sometimes it could just be personal, right? But a year to date and or sometimes a prior year profit and loss may have to be audited. Just depends on the complexity of you and your situation, right? And I already hit I think I said the bank. Now tax returns, profit and loss, and then bank statements could be personal and business, right? So I would just be prepared as a business owner to have both of them, right? The tax returns and the bank statements for the um well, you know what? I misspoke. We don't need bank statements for 2 years. For the most recent 60 days, 90 days, not 60. That's one of those COVID type things that are remaining. So the most recent 3 months, 90 days for bank statements. Okay. And then the prior 2 years for tax returns filed, signed. Okay. And then a year to date profit and loss statement for the most recent quarter. That's typically what happens. Sometimes we might need the prior year. So I apologize for the confusion on that. So moving forward, number three, what are lenders? What are we looking for? Because I think that's good to know as we turn the corner and get ready to wrap this thing up. Um, Again, that's another point of fear for a lot of people. It's like the boogeyman. I'm here to quell those fears. This is what we're looking for. Back to the qualified mortgage, right? The ability to repay. When we're looking at all of these documents, taxes, right? First of all, we're establishing that you've been in business for 2 years. Sometimes we could get around that. But why do we want to establish that? Because it shows stability, right? And then we're looking at your cash flows. That's that 90-day thing that came as a result of the pandemic. Prior to the pandemic, we could just, whatever the taxes showed and the P&L, you could pencil whip that. You know what I'm saying? But the bank statements don't lie. Because as an example, if we showed your taxes over the last 2 years, we averaged, say, $5,000 a month. And then your P&L showed that, for the whatever quarter we're in, your expenses, your income less your expenses average out to $5,000 a month, right? Hopefully you don't mess that up. But the bank statements don't lie, right? The bank statements need to show that, hey, I got income, cash flow coming in, and it averages out to $5,000 a month. That's the gotcha. Okay. So again, you want to work with somebody that understands these things and is able to take your information and see if we can have some exceptions for you and your situations to where we might not have to do these things. Lastly, if not, then be able to advise you, hey, you need to claim this month. We need it's a strategy. I'm not the flash and dash guy. I'm an advisor. Okay. And you want to work with an advisor. Across the board, even if you're not a business owner. Okay. This is the largest transaction that most people will get into in their lives. So you want somebody to help you get into it the right way, be able to manage it while you're in it, help you when you go to the next one. It's a relationship. I digress. So with all of that said, I thought this would be good for you as well. You want to understand that with the different loan types, after we've determined the income that we could use to qualify you with, that will determine how much home you could possibly buy. And with the different loan types, conventional, especially if you're a first-time home buyer, 50% on the back end ratio. That's where you take all the minimum payments that you have, the liabilities, right? And the proposed house payment, add them together, divide that into the gross income. Back end or the bottom ratio shouldn't exceed 50%. FHA, 55%. Again, VA, no lie. I've done, and recently, last quarter, well, I guess I want, because I've done a VA loan that exceeded 60%. It was below 65%. And that's not everybody, because this was a super, super clean. It just made sense. But really, there's no ratios on that. If we get an automated approval, then we're good. And all lenders aren't equal. So keep that in mind as well. And then USD is hard, 43%. So there you have it, guys. Hopefully that makes sense. Schedule a consultation. If you're someone in this position and you don't know, it's it's that's your next most important step. You gotta take that step, apply, and let us put a plan of action together for you so that you know what to do. If there's things you need to work on, you get it straight from the horse's mouth, as my mom would say, right? Get it straight from the horse's mouth. And that way you're not waiting in vain, but you could be waiting on purpose and working on a plan of action if you have to wait. And again, subscribe. Let us know what it is that you'd like to see. And preferably, this was a benefit to you. If so, let me know. So, with that, guys, my time is up, but I thank you for yours. Hey, as I always say, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.